Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about SD Gold Interim Report. Shandong Gold Mining Co., Limited, offers a diverse range of businesses and services, including exploration, mining, processing, smelting, and selling of gold and silver ores, refining and production of gold products, production of special equipment for gold mines, and building decoration materials, manufacturing of standard gold ingots, investment gold bars, and silver ingots, extraction of metals such as silver, copper, iron, lead, and zinc, investment services including mining investment and asset management, environmental protection services through ecological restoration, construction, engineering services, futures brokerage and consulting services. The skyrocketing stock price of SD Gold, a perfect storm of market and company factors over the past year. SD Gold stock price has surged by an impressive 105.91%, driven by a combination of robust global gold prices and specific company-related developments. The period between October 2024 and October 2025 saw unprecedented levels of gold prices, reaching new all-time highs near $3,871 per ounce. This rally was fueled by geopolitical uncertainties, inflation concerns, a weakening U.S. dollar, anticipated interest rate cuts, central bank gold purchases, and the risk of a U.S. government shutdown. In addition to these market factors, SD Gold itself experienced significant positive developments. Its subsidiary, Shenzhen International, successfully listed in Hong Kong, raising approximately $700 million and indicating strong investor confidence. The company also forecasted a substantial increase in its interim profit, projecting a maximum 1.2x rise to RMB 3.05 billion. Analyst upgrades and positive sentiment from brokerage firms further contributed to the stock's growth. The perfect storm of market and company factors has propelled SD Gold's stock price to unprecedented levels, outperforming many other gold mining stocks in the process. The primary drivers of revenue growth or decline can be summarized as follows. Revenue growth is primarily driven by a significant increase in operating revenue, mining volume, and beneficiation volume. The company's self-produced gold sales also saw substantial growth, with an increase of plus 17 billion RMB. Additionally, interest income and principal operating activities contributed to the overall revenue growth. On the other hand, revenue decline can be attributed to decreased sales commission and gold trading expenses, which were offset by increased packaging expenses. The company's concentrate sales and contracted engineering projects also saw a decline in revenue. Furthermore, iron ore revenue experienced relatively low growth, while gold revenue declined significantly. Net income and profit margins overview. The company's net income experienced a mixed trend. Initially, it decreased by -1,344,717.9 RMB due to unspecified reasons. However, subsequent increases were attributed to enhanced resource utilization, improved profitability, and significant year-on-year growth in research and development investment. Profit margins also showed varying changes. While the decrease in net income may indicate a decline in profit margins, other indicators suggest improvement. The recovery rate of comprehensive processing and smelting of mines increased by 0.23 percentage points, and operating income and total profit saw significant year-on-year growth. The implementation of the Corporate Value and Return Enhancement Plan contributed to these improvements. By strengthening management, optimizing production organization, and leveraging technological innovation, the company was able to enhance its profitability and mitigate risks associated with commodity price and exchange rate fluctuations. The company's financial performance indicates a significant improvement in its ability to generate cash from its core operations. The substantial increase of 81.72% in net cash flows from operating activities is a clear indication that the company is generating positive operating cash flow, exceeding expectations, and demonstrating a strong financial health. This trend suggests that the company's business model is efficient and effective in converting revenue into cash, positioning it for future growth and success. The company's debt level and interest expenses have undergone significant changes over the past year. While long-term borrowings decreased by 13.89%, page 26, and total liabilities decreased by 6.9%, page 95, total short-term borrowing increased by 11.6%, page 242. The overall debt level has also decreased significantly, as stated on page 380. However, interest expenses have shown a mixed trend. On one hand, they increased significantly from $128.9 million to $808.5 million, page 92, and rose to RMB 635,598,032.55 in 2025, compared to RMB 553,786,956.07 in 2024, page 100. On the other hand, net interest expenses increased by only 2.3% from $921,164,760.73 to $960,960,521.01, page 295. Overall, while there are some discrepancies in the data, it is clear that both debt level and interest expenses have undergone significant changes, with a notable increase in interest expenses. The company has made several strategic acquisitions to expand its operations and resources. Key acquisitions include mergers of mining rights in significant mineralization belts, a 70.65% equity interest in Pingyi County Gilezhuang Mining Co., Ltd., a 51% stake in Shandong Gold Group Pinglai Mining Co., Ltd., Jinmao Mining, and Pinglai Mining. These acquisitions are expected to enhance the company's mineral resources and capabilities. The company's financial summary reveals that it has indeed paid dividends. Specifically, in 2024, the company distributed a total of RM$0.02 billion to its shareholders. Furthermore, the dividend payout was confirmed on page 367, stating that a dividend of RM$0.8 per 10 shares, inclusive of tax, was paid out. This indicates that the company has prioritized returning value to its investors through dividends rather than share buybacks. Concerns about inventory buildup and supply chain disruption. The financial summary highlights concerns about inventory buildup, indicating potential issues with supply chain management. The data shows a significant year-on-year increase in inventory buildup of 23.54%. Additionally, raw materials and inventory goods experienced substantial increases in closing balances, totaling 41 million yuan and 1.18 billion yuan respectively. These figures suggest that the company may be struggling to manage its inventory levels effectively, which could lead to supply chain disruptions if not addressed promptly. That concludes the financial summary for SD Gold. Feel free to comment below, and I will be happy to answer them when possible.